If you're a veteran or active duty service member with a VA loan, did you know there's an easy way to lower your interest rate and save money without all the paperwork? It's called the VA Interest Rate Reduction Refinance Loan, and it's one of the simplest ways to boost your financial health. In this episode, we'll explore how an IRRRL works, who qualifies, and why you should consider taking advantage of this incredible opportunity to reduce your mortgage payments. I'm Joe Harris. I'm here with my friend Lindsay. How you doing, Lindsay?
I'm good. How are you, Joe?
I'm pretty good. This is one of my favorite loans on the planet.
Oh, yeah? Why is that?
Oh, man. I've been in the business for, in the financials for over 25 years. And I will tell you, there's, in the right environment, there's not an easier way to improve your financial picture than this in a short amount of time.
Gotcha.
So really, it's, as of all the loans we do, it's pretty much the most streamlined loan. The reduced paperwork, all these things that we'll talk about that make this just an awesome option for veterans who qualify.
So I think this conversation sparked because a lot of people were talking about refinancing lately.
Right.
So what does it stand for, the IRRRL interest? Yeah.
I got it.
Yeah. Help me out here.
Yeah, no worries. So IRRRL is Interest Rate Reduction Refinance Loan. So simply put, it's a loan that will reduce your interest rate.
So like a refinance.
It is a refinance.
Okay.
But it's a streamlined one, so it's a lot easier.
Okay. So who's eligible for these IRRRLs?
Okay, so you have to have an existing VA loan.
Okay.
Right? So you have to be typically who has a VA loan, veterans, right? Or active
Right.
duty service members,
Right.
Retired or active duty or just veterans, And so typically you have to have made payments on time for the last year, at least 210 days since you last did this loan, the original loan. But as far as qualifying, as long as you made your payments on time, there's lots of features of this loan that don't exist on their VA loans. So we'll talk about those as well.
Okay. What are some of the advantages of it?
Some of the advantage of the VA loan, well, let's say it's reduced qualifications. So you don't need, I say typically, there's certain cases where you do need some of these things.
Sure.
But typically you don't need an appraisal. So you don't have that expense, right? You don't have that expense of an appraisal, and it's not something you have to worry about. So typically you don't need an appraisal.
Right.
You typically don't have to income qualify. So your income doesn't matter. If you've been paying on your loan for the last year, it stands to reason you're going to continue to pay on it if you have a reduced rate, right, and reduced payments.
Right.
So they said we don't need to credit qualify you, which is cool. Most of our veterans, they credit qualify anyway, but it's just reduced documentation for the veteran too.
So less hurdles to jump through.
Less hurdles, less paperwork, less qualifications.
That's nice.
If you're thinking, I don't want to go through that again because when I did my loan, there was so much paperwork needed.
Yeah.
It's not the same deal, right? There's also, you don't typically need to prove your assets unless you have to bring or choose to bring money to closing. A lot of times the closing costs can be rolled into the loan. But here's another advantage. There's not as many closing costs, typically. I mean, it depends on the lender. Now, I know for us, we don't have any lender fees on those loans.
Oh, that's fantastic.
Now, we might have, if you want to buy the rate down, that's to buy the rate down. There's an option. But as far as junk fees, we don't have any. Morgan Financial doesn't have any. By the way, if you're not a subscriber, please like and subscribe now. Hit that subscribe button. And anything you have questions on throughout this, just put the comments down below. Or if you're watching this on YouTube or Facebook or one of those, we have ways to contact us. So please reach out if you have any questions. But going back, we don't have, Morgan Financial currently to this day does not have any closing costs on. I mean, not closing costs, lender fees on there.
That's
Some lenders
awesome.
put points on there and things like that. They're junk fees, but we don't do it. So typically there's a reduced cost to do this loan.
Right. So I had a question from somebody previously who asked if they had to occupy the property.
Okay, so when you buy your home as a veteran, or you typically have to occupy it within a certain amount of time, a very short time frame, or have a reason if you're stationed overseas that someone's occupying it. But typically you have to occupy the property.
Well, then what if you get PCS'd somewhere else?
Well, that's a whole different story.
Yeah.
But on IRRRLs, you don't have to currently occupy the property to do it. So let's say you did PCS, like you just mentioned, and you changed your station to Minot, North Dakota. I think I got that right. I just think of that one always stands out to me. But if you change your station and you choose to rent your house out, and the opportunity comes to refinance, you can refinance that into a lower rate. Everything else being equal, then you're going to have a lower payment, continue to make your have the benefit of a lower payment and put a little more cash in your pocket.
Nice. You had mentioned the appraisal before. Can we go back to that? You said an appraisal isn't needed or is needed?
Is not typically needed on a VA IRRRL.
Okay.
Very rare circumstances these days is it needed, but it's not required for an IRRRL. Like I haven't seen one in a while. And so that's just one less hurdle you have to jump over.
Yeah.
It's like, are you making your payment on time? Yes. Well, if that's the case, you have a VA loan,
Yeah.
you've been making your payment on time, very likely I'm going to be able to help you out.
You're in good standing.
You're in good standing. Now, I can't tell you everything else. I mean, there are, it's typically not a credit qualifier, but a lot of lenders want to see some kind of credit score on there. They want to see a credit score. Is it credit dependent? Not really. That doesn't make you not qualify,
Right.
but it might have an impact on your interest rate depending on the lender out there.
Okay.
So like I said, it's a more streamlined way to get the reduced payment than say a traditional conventional refinance, which is full credit, income, assets, credit, all the paperwork under the sun.
Yeah.
There's some paperwork needed. We typically like to see a mortgage statement. We typically like to look at the title work that you got, a couple other little things like IDs, but for the most part, it's pretty easy.
Yeah, that was actually my next question, what the differences are between a conventional refinance versus an IRRRL.
Yeah, the conventional refinance is that, it's a full credit qualifier, all income, assets, everything, credit docs, lots of paperwork. Not to say it's not, that's the right case, but the veteran, they do have a benefit here. They served our nation.
They're entitled to it.
This is as a benefit. This is one way that we give back to our veterans, is that they have these benefits for helping fight the good fight for our nation. So just one more thing.
Joe, quick question for you. You had talked about the closing costs. What does that mean in terms of like funding fees and the interest rate?
Okay, let's talk about the funding fee. So there is a reduced funding fee for these types of loans. Usually it's a lot higher than it is for these loans. It's to try to reduce the amount of closing costs, because the funding fee is typically rolled into the loan.
Gotcha.
So it is a significantly reduced funding fee. And if for disabled veterans that are deemed disabled, 10% disabled or more by the VA, there is no funding fee. So it's a great loan for that.
Awesome.
And you said interest rates. So the interest rates on these loans are typically lower than they are on other types of loans. Again, look, if the VA says, look, if you can benefit the veteran and lower their rates, it's going to better them, put them in a better situation, and even make it more likely for them to continue to make their payment on time as promised.
Well, and speaking of that, what about the veteran that wants to do it for cash out?
So it does not allow for a cash out option.
Okay.
There's other VA loans. Like you can do a regular cash out VA loan. If you have a lot of equity in your house and you want to pay off credit debt or student loan debt or some other payment, or maybe build onto the house or do renovations, then a cash out option might be good for you, but it's not the same type of loan. It's a different loan. It's for a streamlined option. It's not for the streamlined IRRRL option. It's just a regular VA cash out loan. Then you can actually take cash out, but not on these IRRRLs.
Gotcha.
And you mentioned terms. So as far as the terms go, there's lots of options on terms, but if you go from a lower term to a 30-year, higher term, to a 15-year, there might be some credit qualifying in for that, because now you might increase your payment, even though you're reducing your interest rate and these things. But for the most part, it is a little bit flexible there as well.
Awesome. Well, when do you think it makes sense to do an IRRRL?
When does it make sense? So the VA has very strict guidelines on this. So if it doesn't make sense, the VA will not allow us to do it. Okay. So one of the things they look at is the cost versus the benefit. So the cost will be the cost, the cost of the refinance. The benefit is how much money they're saving. So if you divide one by the other, you have to come out with 36 months. In other words, the break-even point of all of the benefit has to be able to pay back the costs within 36 months, or the VA says that doesn't make sense. So there's very specific things that all lenders have to put in there.
Right.
So we're subject to these laws and rules, and so it has to be less than a 36-month payback for the veteran to do it. And that makes sense. It's less than 3 years. Now, if you think about that, if you're going to be in the property for 2 years, you don't really want to, and you know you're going to sell it after 2 years, you don't really want to do a loan that's not going to really truly benefit you, the benefit versus the cost, for 3 years. But if you're going to be in the property 5, 10 years, or you don't know when you're going to exit, and you want to increase your cash flow and reduce the amount of money you put out every month, this loan makes sense.
Yeah. Awesome. Well, that's all I had for you.
Cool. Well, if you're out there trying to decide, is a VA loan right for me? Please reach out to one of our people here at Morgan Financial. We love helping our veterans, and we love the VA IRRRL, and we love when we can give people reduced interest rates in order to better their payment and better their position. So please reach out, like, share, comment, do all those things the kids say to do, and we'll see you next time.